Chapter 5. Risk Management Essentials. Welcome to Chapter 5 of Capital Markets 101, Navigating the Financial Seas. In this segment, we dive into the critical realm of risk management, exploring the fundamental principles and strategies essential for safeguarding your investments in the dynamic world of capital markets. Understanding risk in investments. Begin your exploration by understanding the multifaceted nature of risk in investments. Recognize that risk is an inherent aspect of the financial landscape, encompassing various factors such as market volatility, economic uncertainties, and individual investment decisions. Grasp the significance of acknowledging and managing risk as a proactive strategy. Types of investment risks. Navigating the seas of uncertainty. Navigate through the different types of risks investors face in the markets. From market risk and credit risk to liquidity risk and geopolitical risk, understand the unique characteristics of each and how they can impact your investment portfolio. Recognize that a comprehensive risk management approach involves identifying, assessing, and mitigating these various risks. Diversification. Spreading the waves of risk. Delve into the powerful strategy of diversification as a cornerstone of risk management. Explore how spreading your investments across various asset classes, industries, and geographic regions can help mitigate the impact of adverse market conditions. Understand the principle of not putting all your financial eggs in one basket and how diversification can enhance the overall stability of your portfolio. Asset allocation. Balancing the investment ship. Explore the crucial concept of asset allocation in managing risk. Grasp how allocating your investments strategically across different asset classes, such as stocks, bonds, and cash equivalents, can align with your risk tolerance and financial goals. Understand the dynamic nature of asset allocation, adapting to changing market conditions and your evolving investment objectives. Risk tolerance assessment. Knowing your seafaring limits. Embark on the process of assessing your risk tolerance, a crucial step in crafting a risk management strategy tailored to your individual preferences and financial situation. Understand the factors that influence risk tolerance, from financial goals and time horizon to personal comfort with market fluctuations. Recognize that aligning your investments with your risk tolerance is key to navigating the seas of uncertainty. Stop-loss orders and risk mitigation tools. Setting safety nets. Navigate through practical risk mitigation tools, such as stop-loss orders and other risk management techniques. Explore how these tools act as safety nets, automatically triggering sell orders when investments reach predefined price levels. Understand how incorporating risk mitigation tools can help protect your capital and limit potential losses in volatile market conditions. Continuous monitoring and adjustment. Navigating changing tides. Recognize the importance of continuous monitoring and adjustment in effective risk management. Grasp the dynamic nature of capital markets and how staying informed about market trends, economic indicators, and global events enables you to make timely adjustments to your investment strategy. Understand that proactive monitoring is essential for navigating changing tides. Conclusion. Safeguarding your investment voyage. As you conclude this chapter, envision yourself as a captain safeguarding your investment voyage through the seas of capital markets. Recognize that risk management is not a one-time endeavor but an ongoing process that requires vigilance, adaptability, and a keen understanding of your financial goals. Armed with the knowledge gained in this chapter, you're better prepared to navigate the uncertainties and set sail confidently into the next chapter of Capital Markets 101.